So first of all, they're going to look at the degree of control. And they generically call it, they're like, okay, how much control does this person have over the other? Okay, well, if they get an answer to that, they're starting to formulate an opinion as to whether they're a worker in the terms of independent contractor or a worker in the terms of an employee. How much investment they have, and they call it investment in facilities, and you've heard me use that term. How much personal investment does this person have? And, does it look more like it's a business, or have they really had no investment in this? Risk of loss, that's a biggie for the courts. Could they possibly mess up and do a really bad bid and lose money? Or are they pretty much guaranteed to be sitting good no matter what because they're paid hourly? What about the right to discharge? That one saying, is there ability? Can that person be, terminated from this contract easily? So that's another factor the court looks at. How integrated are they into the business? How important are they to the business? Or is it like, okay, they can get another, Joe Plumber to take care of that, and it's not going to be like, oh, now we can't operate as a business. How permanent the relationship is, that's another important thing to the courts. And they actually go into saying, what was the relationship the parties thought they were creating at the beginning? So they'll actually consider their intent. What were they intending to create? And how important is it in the overall scheme of things? And how many employee benefits are provided? Did they even provide any benefits? Or was it like, oh, you're on your own because you're an independent contractor? So they're going to look at things a little bit differently. But a lot of it all stems down to that control aspect again, financial and behavioral. And all these controls are still filtering into how we're looking at the court factors. So we're going to be concentrating on are some court case examples, because then we can see a little bit easier. I gave you 8 ways that a court looks, but it maybe doesn't make as much sense until we go through some examples. So the first example, and this is, from a while ago. It's not that long ago in relatively recent history. This is George Quintana. He's an exceptionally skilled production worker, and he did approximately 150 commercials in Southern California in 2010. He did it in his name and his corporation. He was contending that he was an independent contractor, not an employee. His job title actually varied from job to job and included driver, hyphenate driver, set dresser. Production companies hired him to build sets and expected him to provide any tools he needed to complete the job. However, it's also common practice for production companies to outsource paperwork to just a small handful of payroll companies to pay workers. He was paid by the same payroll company for 6 months, but was working on more than 20 projects run by lots of production companies at that time. So that's a little bit of the fact pattern. I'm going to go ahead and we're going to go through all these different ones now here as we touch on them, so that you can start formulating an idea. If this person an independent contractor, or are they an employee? So under the degree of control, he had a large degree of control of how he was going to accomplish the tasks he had to do throughout the year. Production companies might provide a sketch drawn by a set designer or just a vision of the project, but he had the independence in how he wanted to accomplish it. He ordered his own props, modified them, hired workers as needed, and got rid of workers that were not performing. Even though producers had a vision of the set in mind, he was the one that had a degree of discretion how to construct it, and often told them their initial vision needed to be modified. The court determined that, any ideas on this one? This degree of control indicated independent contractor. So they said the first factor, independent contractor. Investment in facilities. He provided all the tools used, remember, and he invested heavily in them. He bought a number of high-dollar items required for his work, and there was no evidence suggesting production companies supplied the tools or a budget even for that equipment. The court determined that a worker providing their own tools used for work weighs towards finding him to be an independent contractor. So we got 2 factors saying independent contractor. And not, like I said, some of these will go both directions. So this helps to kind of have something to compare it to a real life example. How about the risk of loss? Production workers have some real risk of profit or loss. He could accept or decline projects, and sometimes he had to submit a bid. At times, the production company would give him a fixed fee for his services, and he testified he would prepare a budget to see if he could perform the work. But sometimes production companies paid him on union scale rates. Those are set by collective bargaining. But other projects, he got to set his own rates. Some companies paid rent for the use of his tools, and others refused. So he would just increase his hourly rate to compensate for their use. Some paid based on estimates, and others paid on hours billed and reported. But in all these cases, the court found that he controlled which projects he worked on and whether to accept the amounts offered. So he was considered to have a valid risk of loss. So risk of loss weighs towards independent contractor. How about the next one? Right to discharge. production companies did have the right to fire him. So although normally that's considered a way towards employee status, he actually argued it would be seldom exercised due to the short-term nature of the jobs. This is kind of the gig economy idea, and if a production company was dissatisfied, he would actually rarely be fired, but instead he would just never get a phone call again from them and probably never work for that company again. The court actually didn't indicate whether they thought this indicated employee or independent contractor status. They left that one as undecided, and they can do that, unfortunately. How about the part of a regular business of the company? Normally, work that is performed as part of the regular business indicates employee status, but it was actually difficult for the court to determine who the principal was on a commercial shoot. So again, they determined the arguments could go both ways on this factor, so they found this one to be neutral. The permanence of the relationship. It was argued that he was employed by 5 payroll companies during this time, but they are companies used by several different production companies, simply just totaling up the wages for the year. A review of the details showed that the longest project was 1 month, but most were shorter than a month. And during the time, he worked on between 80 and 100 jobs during the year. This would suggest that jobs are so short-term, the court believed this factor actually weighed on the side of independent contractor instead of employee. And the relationship to the parties. What did they think they were creating? So we're starting, by the way, with one of the easier cases, and we'll get into just 3 other more interesting. Throughout the year, he had relationships with so many production companies and 2 unions that the relationships with the production companies appeared to be transitory and just task-focused. So it was determined neither party really intended to make it permanent, and there was no employer-employee relationship. So what they do is they look at each of these factors and say, okay, this one is weighing more heavily towards independent contractor, we don't know, we're neutral. So they go through and look at them all and say, well, based on these above factors, we're going to weigh that he's an independent contractor. He properly deducted his items on a Schedule C, and therefore any of the associated penalties that he was contesting are also reversed. So in this case, that's how it laid out for this particular worker, and then how the court just looked at those 8 factors. Getting into another one, so they said independent contractor for George there. So just a couple more to go, and hopefully this is starting to bring it to light as to how these work and maybe give you some perspective on how they could be viewed. So we're going to talk about another one called Keller Action Auto Body. John and David Keller owned Action Auto Body, repair technicians, painters, and mechanics, as well as 3 office and janitorial workers were all paid as independent contractors. Workers got to set their own hours and choose their own work, and they were paid pretty much on commission only and free to obtain some of their own work if they wanted. The court went in and used, as we're going to see, same factors again, but they added one extra factor we'll talk about. So, control. Action argued they did not have any control over the work done. The workers had very specialized skills, and they worked on their own schedules, and they were able to show in the case of the auto body workers they had no control over the means used to accomplish the work or even when it was accomplished. So this factor weighed in favor of independent contractor status. The court says it weighed heavily in favor of independent contractor, just to note that. In the case of the 3 office and janitorial workers, the record was sparse on the ability to control their actions, and the court felt that the action had the ability to control their work. So they're actually separating these out and saying, okay, one type of worker we're seeing one way, and the other type of workers we're seeing another way. As we look at the second one here, investment in facilities, we look at the workers provided their own small tools, but Action provided heavy tools such as sprayers and lift equipment. The court found it unconvincing that the office workers provided their own equipment. So this factor was weighed for all to be an employer-employee relationship. So we're seeing one is weighing as independent contractor and one as employee. What about risk of loss? The court found this neutral in the case of the auto workers because payment by a commission is consistent with either an employee or independent contractor situation, and the workers' risk of loss was actually minimal. Even though they were able to bring in their own work, Action was responsible for finding most of the work. So it still was in favor of employee status for the office workers, but neutral for the auto body workers. The right to discharge. The workers could be discharged by Action at any time and for any reason. So that indicated employee status. How about if they're an integral part of the business? Even though Action was in the business of auto body work, the court felt that the main activity Action was to estimate repairs and then refer the vehicles to the workers for repairs. Action could survive and continue the repair work without the workers if they were to leave, even though it would be at a lower volume. So the court found this factor to be neutral. permanence of the relationship and the relationship the parties thought that they were creating. The court actually felt this factor carried very little weight because it thought both employees and independent contractors in this case could be discharged at will. So they're going, neutral. We don't think this really matters all that much. As far as the relationship they thought they were creating, instead of just permanence, the court felt that everyone involved clearly thought that they had created an independent contractor relationship. So they actually thought, okay, we're going to weigh that in the factor of a contractor relationship because that's what the parties thought that they were creating. But they did add one here, provision of employee benefits. No employee benefits were provided, so the court thought this weighed in factor in favor of independent contractor status. So what their final determination was is they determined the auto body workers were independent contractors and the 3 other workers were employees. So this was a split decision. So they made action liable for employment taxes on just those 3. And then we're going to talk about in just a little bit something called 530 safe harbor relief. The court says that they were not eligible because they didn't timely file their 1099s. So that could have been an out for them for the 3 employees that really they had all the control and that were truly decided to be employees, but they didn't follow the proper procedure and file their 1099. So here's one that was split in the sense that not all were across the board decided one way or another. So auto body workers were contractors and the other 3 were decided to be employees. And we have one very last one to show you, just to kind of give you one last perspective on it. We have Dean Ciabatti at Liberty Mortgage. Dean owned 33 1/3, or 1/3 of Liberty Mortgage. He was named president because he had the largest ownership share. Liberty did not provide him an office, and he worked at home or client offices or closing locations, and he was compensated solely by commission. So the degree of control. So Ciabatti did not control Liberty Mortgage, even though he was the largest individual shareholder, and Liberty exercised no supervision over him and how he sold mortgages. So the court found this indicates an independent contractor status. The investment in facilities, while the court said a home office does not constitute a sufficient enough independent contractor status, it is at least consistent with the idea of an independent contractor status because Liberty did not provide him an office. The fact that he claimed deduction for home office expense helps indicate an independent contractor status in this case. How about the opportunity for profit and loss? He was paid a percentage of loans he closed, and at some point, Liberty unilaterally changed the percentage paid. So this factor indicated independent contractor status according to the court. The permanency of relationship. The court found no records containing any agreement, but since he was paid for at least 3 years and was a partial owner, it appeared he had a permanent relationship with Liberty, and that said employee status. The right to discharge, there was no indication of any right to discharge. So the court said this did not indicate either because they couldn't really tell what was the agreement there. It is in the business of Liberty Mortgage, was a sale of mortgage loans, so because it's part of the regular everyday part of the business, that pointed towards employee status. As to the relationship the parties thought they were creating due to the lack of clear records and inconsistencies in treatment, because here's what really happened. Some years he was treated as a W-2 employee, and some years 1099, and some years they were both issued. So it was not really clear to the court what they thought that they were creating because there was no consistency. Provision of employee benefits. No benefits were provided, so they thought, okay, this indicates an independent contractor status. So the court determined that with all these factors, because they're kind of going both ways, but they said that we believe he's an independent contractor, therefore he's entitled to deduct those business expenses on a Schedule C of his individual tax return as long as they're substantiated. So here's, the type of cases that we can see out there in, the tax courts or in real life. And what they're doing is they're saying, we don't want all those 20 factors. We're going to look at just these and kind of weigh them and say, is it stronger on one side, stronger on the other? And even if it goes both ways, they're going to say what is on that side of the scale a little bit stronger. And that's going to be how they decide these. So that's just to give you a little bit of an idea how court cases are decided in the terms of those factors. And sometimes they throw in those extra ones, that provision of employee benefits one. I'm seeing that occasionally in some of the court cases as well.